Welcome to the Explainer. Today, we're doing something super interesting. We're cracking open the dense, 100-plus page 20F annual financial report of Relx plc to reveal exactly how a legacy publishing company morphed into a modern AI and analytics powerhouse. Seriously, if you've ever wondered who is quietly powering the data behind the world's most critical professional decisions, you're definitely in the right place.
So let's just jump right in with a number that kind of blew my mind. 1.8 billion. That is the number of outstanding shares this invisible corporate giant currently holds in the market. It's a massive figure, and it really hints at the sheer magnitude of their operations, quietly humming in the background of the global economy. I mean, a share count this high reflects incredible market liquidity and deep institutional trust. It signals just how fundamentally entrenched they are in the bedrock of global business.
Now, you probably haven't heard the name Relx dropped in casual conversation, and that's by design. They define themselves not as a traditional publisher of magazines or books anymore, but as a crucial global provider of information-based analytics and decision tools. They are quite literally the invisible engine operating behind the scenes. When a doctor researches a rare disease, when your lawyer drops a complex legal brief, or even when a bank assesses fraud risk, they are almost certainly relying on the data architecture built by this exact company. To break all of this down, we've got a 5-part agenda today. We're going to look at the invisible analytics giant, their 4 pillars of growth, the massive shift from print to AI, the financial payoff, and finally, the risks in the digital age. Let's get into it. All right, Section 1, the invisible analytics giant. To truly wrap your head around the scale of this giant, just think about their immense global footprint. We're talking about serving customers in over 180 countries, operating offices in about 40 nations, and employing a workforce of more than 37,000 people, with roughly 40% of those folks based right in North America. By embedding themselves so deeply into the daily, moment-to-moment workflows of professionals worldwide, they've built this foundational moat that is almost impossible for a new competitor to replicate. Moving right along to Section 2, the 4 pillars of growth. So where is all this money actually coming from? Out of their staggering £9.59 billion in projected 2025 revenue, their core business is heavily driven by risk, which makes up 36%. Scientific, technical, and medical follows closely at 28%. Legal accounts for 19%, and their exhibition segment rounds the whole thing out at 13%. It's an incredibly well-diversified portfolio, all anchored by specialized, highly valuable information. Here's the real secret sauce, though. They aren't just selling you raw data, they're selling answers. Each of these 4 pillars relies heavily on extracting massive data sets to provide crucial, highly specific decision-making tools. For instance, the risk segment focuses intensely on financial crime compliance and fraud identity tools. The scientific segment, or STM, handles primary research and innovative stuff like SurePath AI. Over in legal, they are pushing boundaries with Lexis+ AI for corporate law firms. And finally, exhibitions brings professionals together through networking events. Ultimately, they give professionals the exact tools they need to make sense of overwhelmingly complex industries. Which brings us to Section 3, the print to AI shift. This is where the metamorphosis actually happens. Over the past 25 years, Relx has aggressively and systematically starved its legacy print business. Physical print has plummeted from being their core identity to a mere 4% of total revenue today. Let that sink in. Meanwhile, electronic formats now completely dominate, generating a massive 84% of their revenue. It is a total, unapologetic digital metamorphosis away from paper and straight into the cloud. And honestly, they are absolutely ruthless about shedding their past to build their future. The 20F report explicitly outlines their ongoing plan to intentionally outsource, form joint ventures, and just plain sell off print assets. They are actively removing any management distraction, clearing the absolute best path forward for high-value analytics. Instead of printing paper, they're pouring money into embedded AI. Because today, you don't just hand a lawyer a heavy reference book, right? You hand them an AI tool like Lexis+ AI or their integrated assistant, Protégé, which can literally draft complex legal arguments instantly. For scientific researchers, they're rolling out Scopus AI and SurePath AI. And in risk, they leverage advanced behavioral intelligence. They are pushing their entire product mix far away from static information and toward highly profitable, predictive tools that do the heavy lifting for you. Okay, Section 4, the financial payoff. Because transforming a business model is one thing, but making it highly profitable, that's another entirely. And this aggressive pivot into AI directly boosted their bottom line. Their adjusted operating profit climbed from roughly £3.2 billion in 2024 to over £3.3 billion in 2025. That kind of underlying growth is the direct result of migrating customers from lower-margin legacy products to high-value, totally indispensable AI analytics. And for the investors tuning into this explainer, you will absolutely want to take away this massive figure. Relx spent £1.5 billion purely on share repurchases in 2025 alone. They bought back roughly 39.5 million shares. That is a colossal return of capital to their shareholders, entirely fueled by their newfound digital efficiency. How do they afford all those buybacks? Through an extraordinary ability to generate operational cash flow, reaching over £3.7 billion this past year alone. This absolute river of cash allows them to continuously fund new internal AI development, execute strategic acquisitions, and pay growing dividends, all without skipping a single beat.
Finally, Section 5, Risks in the Digital Age.
So it really begs the question, right? If Relx is so deeply embedded and phenomenally successful in curating global professional data, what could possibly disrupt their momentum? What is keeping their executives up at night? Well, their annual filing outlines a rising tide of very modern threats. For starters, they face constant operational risk from cybersecurity and ransomware attacks. On top of that, they are deeply concerned about third-party generative AI tools bypassing their paywalls and scraping their copyright. This is a huge existential threat because proprietary, gated data is the entire protective moat around that £3.3 billion profit. Add to that the severe regulatory penalties under laws like GDPR if they fail to protect user data. And finally, their massive scientific segment has to continuously navigate the shift toward open access publishing models, which is fundamentally changing how they monetize research. And these aren't just theoretical worries. Actually, their risk segment is still operating under ongoing Federal Trade Commission consent orders, stemming all the way back to data access incidents in 2006 and 2008. I mean, in tech years, 2006 is ancient history, which really highlights just how permanent these regulatory punishments can be. It proves that data security is a constant, expensive, and critical battle, requiring mandatory third-party monitoring and comprehensive security programs to this very day. Let's wrap up this explainer with something to chew on. As legacy publishers like Relx complete their metamorphosis into invisible, highly profitable data giants, are we, as a society, fully prepared to trust the AI systems that now govern our most critical legal, medical, and financial decisions? It is a truly fascinating shift, and for sure, it's one we will be watching closely. Thank you so much for joining us on this deep dive into the data behind the data.